Assalamualaikum. My name is Muhammad Nazmi bin Asrizal from Group DMK 6A. We are going to talk about what is share, and I will explain about the definition of shares. Shares are unit of equity ownership interest in a corporation that exists as a financial asset providing for an equal distribution in any residual profit, if any are declared in the form of dividends. Shareholders may also enjoy capital gains if the value of company rise. Share represent equity stock in a firm, with the two main types of share being common share and preferred share. As a result, share and stock are commonly used interchangeably. There is an important detail that we have to take note that share represent equity ownership in a corporation or financial asset owned by investors who exchange capital in return for this unit. Secondly, common share enable voting rights and possible return through price appreciation and dividend. Preferred share do not offer price appreciation but can be redeemed at an attractive price and offer regular dividends. Most companies have share, but only the share of publicly traded companies are found on stock exchange. And now I will give example of shares. Investors buy share of company that they believe will grow and hope to capture some of those capital gain as investor. As the 10-year bull market that began following the 2008 financial crisis stretched on, share of company continually reached new heights through 2019. So they call FANG, Facebook, Apple, Amazon, Netflix and Google. That stock led the market rally. As the share price soared by double digit in 2019 on strong earning result. The increasing price meant that investors were willing to pay more to own share of this company. All told, the share of the companies in the S&P 500 technology sector traded up over 300% from 2010 to February 2020, when share of all companies on the stock market began to experience volatility due to public health, economic, and political uncertainty around the COVID-19 pandemic. After briefly falling in March 2020, the S&P 500 technology sector has continued to reach new heights. For the next topic, I will pass on to the next presenter. Thank you.
Hello guys, my name is Muhammad Rohaizat bin Roslan from the MD 6A. I want to explain about type of share. There are 5 types of share that I want to explain, but there are many types of share in the Google. I just want to explain these 5 because it's simple. The first type of share is ordinary share. Ordinary share are the most common type of share and as a standard share with no special right or restriction. This share have potential to give higher gains and higher risk, but ordinary share have voting right and they are the last to be paid if the company went up. The next type of share is preference share. This share receive a fixed dividend, which means that a shareholder will not benefit from an increase in business profit. This preferred share have no voting right like the ordinary share. The next type of share that I want to explain is non-voting ordinary share. Non-voting ordinary share use the same condition as ordinary share except with regard to voting right. Shareholder may have voting right in certain circumstances or they might not have it. The next type of share is equity share. Equity share are also known as ordinary share. The majority of shares issued by the company are equity share. This type of share is traded actively in the secondary or stock market. These shareholders have voting right in the company meeting. They are also entitled to get dividend declared by the board of directors. However, the dividend on the share is not fixed and it may vary year to year depending on the company profit. Equity shareholder receive dividend after preference shareholder. The last type of share that I want to explain is cumulative preference share. Cumulative preference share give holder the right that if a dividend cannot be paid one year, it will be carried forward to successive year. Dividend on cumulative preference share must be paid, despite the earning level of the business, provided the company has profit that can be distributed. Difference between share and unit trust. There are 4 difference between share and unit trust. The first is, in share, you will get dividend and issue right, but in unit trust, no dividend, issue right, and voting right. It means voting right in share for the highest bidders in the company. It have advantage to control the board of company and remove the director. But in unit trust, there are no voting right. The next difference is share will give you high return, but unit trust will get low return. It means in share, you will have high return and high risk, but unit trust, low high risk and low return.
The third about difference between share and unit trust is for share, you will get capital appreciation, but you will not get the unit trust. And lastly, shares are safe to invest, but unit trusts are not.
Hello, Assalamualaikum. My name is Mazwan Ismail from DMK 6A. So I will talk about the part of the topic of share. That's mean the topic is modus operandi of share. So firstly, I will tell you, you know that's what the meaning of the modus operandi. Okay, the meaning of the modus operandi is the procedure or the way to do something. So the modus operandi of the share, that's mean the procedure or the way to do a share. So I will show you 5 modus operandi of share that I found. Firstly is wash trade. Wash trade is a sale and purchases transaction on share made by the same party without any change of ownership or beneficial ownership of the share. Secondly is marking the close. With this mode, the performer want to create a new mark or price on a stock. This mode is usually performed in the last second before the closing of the trade, usually in small lots, for example 1 or 2 lots only, so that the capital issue is also small. Thirdly is a pump and dump. With this mode, the actor pumps the price of a stock upward and upon the arrival, the actor sells the stock he owns and exits the market. Once there's no pumping, then the stock price will immediately jump freely. Another form is hype and dump, where the preparator will also spread positive rumors about the stock being fried, so that the private investors think there will be a price increase and lure to enter. So next is alternate trade. With this technique, a number of parties promise to perform transactions alternately from the seller to the buyer and the buyer to the seller. The aim of the actor is to create the impression that a stock is active trade so that it can lure another investor to enter. When it reaches the desired price level, players immediately exit the market by selling all of the shares they are on. So, lastly is pre-arranged trade. With this mode, 2 or more parties agree to place buy and sell orders at the agreed time with the hope that the 2 orders are matched and transaction occurs. This mode can also be done multiple times. The aim is to increase or decrease the price, or simply to give the impression that the stock is actively traded, so as to invite other investors to enter and participate in transaction. So that's all from me. Thank you.
Hi, my name is Muhammad Aizam bin Apandi. I'm from DMK 6A. So I will explain about the advantage of share. I have four advantage. The first one is high liquidity. The second one is not taxable for the profit share. The third one is share is Sharia compliance and safe. And the last one is the profit of share is unlimited. The first advantage is high liquidity. The investor can sell some or all their share at any time if they have any financial problem, example like being fired. The next advantage is not taxable for the profit share. Profit on stock investment is not taxable because it is a capital gain. Next, Sharia compliance and safe also is an advantage of share. Shares are not illegal because they are regulated by the Securities Commission (SC) and the Bursa Malaysia. And the last one is total profit is unlimited. If investing in unit trust like ASB Amanah Saham Bumi Putra, the profit is only based on what the unit trust announced. However, stock investment in Bursa Malaysia, if you have the right knowledge, the profit earned is unlimited. Even to make 100% profit is not impossible. I will show you the real data of share in Bursa Malaysia. If you can see the graph, this is the graph of Supermax Corporation that I take from investing.com. The y-axis on the graph show the price for one share. You can buy one lot minimum. One lot equal to 100 share. In 27 December 2020, the price is 6 ringgit and 6 cent. Then, at 3rd January 2021, the price increased to 7 ringgit and 37 cent. If you buy the price at 27 December and sell at 3rd January, you will get the profit RM 1 ringgit and 31 cent for one share, but the minimum you must buy is one lot. So the profit that you earn for one lot is 131 ringgit. But if you don't want to sell your share at 3rd January, you can see the graph and the price is decreased. That means you will lose. Or you can wait until the price increase.
Hi, Assalamualaikum. My name is Ilia, Zalikha, Binti, Akmal. I am from class DMK 6B, and now I would like to explain about risk of share. Investors should be aware of the risk that exists with any type of share. In order to receive a return on money invested, you need to be prepared to place that money at risk. There are some of the risks of share which investors should be aware of when investing in share. Firstly, the risk of capital loss. When a company is performing poorly, or when the market perception of the company is negative, the share price may fall below the price which you originally paid for the share, or even to zero. If a company goes out of business, its share will become untradeable and it is likely to be delisted. Where a liquidator is appointed, shareholders are last in the list of other creditors such as banks, suppliers, to receive any funds that may be realized. Secondly, timing risk. This is the risk that you buy or sell a share at the wrong time. Not all sectors of the market follow the same price cycles. Understanding business cycle and how different companies perform during different phases of the business cycle can help to manage the effects of timing risk. Next, volatility risk. As we know that share price can be very volatile An investor should be aware that their shares may fluctuate significantly in price in a short periods. This can apply to individual stock sectors or the market itself. Last but not least, market risk. This is the chance that the entire market will decline, thus affecting the price and value of security. Market risk in turn is influenced by outside factors such as interest rate changes. So these are just some of the risks of share. Individual share will have their own individual risks. It is critical that investors understand the effect that this risk can have on their investment.
That's all from us. Thank you.